Yo, what's good guys? Welcome back to another YouTube video. This is episode 2 in the 2026 mentorship. If you haven't watched episode 1, go and watch it now and then come back and watch this video because it's going to be a follow-on video from what we discussed in that first one. So we spoke about internal and external liquidity and key levels. What we're going to talk about in this one is candle ranges, CRT, so candle range theory, what it is, how to trade it, where to look for it, the different variations of it, and accumulation, manipulation, distribution, liquidity, time and price. So there's going to be a lot of value in this video. So make sure, if you need to watch it more than once, make sure you do so. Take notes, leave a like and a comment on this video. Give me some feedback. That will give me some motivation to get these videos out, multiple times per week. Subscribe, follow the social media, and yeah, it helps out a lot. So let's get into it. So there's 3 components that you need to understand in order to be a successful long-term trader. Those 3 are liquidity, time, and price. Liquidity is how the markets move. They need liquidity in order to move. Price is either come in to fill liquidity or take liquidity. That's literally all it's ever doing. So you need to understand the concept around it and understand that price isn't random. We come into certain areas and expand into certain areas. Everything is very much programmed. And it's not random. Price retraces into certain key levels, takes liquidity, fills liquidity, and then price expands into liquidity. The next component is time. Everything is time based. Even the candles, the time of day, the moves, they all happen around certain times. Even the candles. So the monthly candle, of course, is for the duration of the month. The weekly is from Monday to Friday if you're trading FX. Daily candle is the duration of the day, and then hours, minutes, etc. You need to prioritize time before price. If you have price and it's the wrong time of day, it doesn't mean anything. You need to have time, then price. That's very important. Liquidity, time, price, in that order. So candle ranges. Every single candle, whether it be on the monthly, daily, the 5-minute, every single candle is its own range. We have a price range from the high to the low. Every candle opens, creates a low, creates a high, and closes. So every candle is a price range. That is what CRT is. It's having a candle marking the high and low, and then you want to see the range low or high be taken out, and then you're trading it to the opposing side of that range. So let's say that this is a bullish daily candle. Price will open, and if I just show you, price will open here on a bullish candle. We will print a low. So if we are going to have a bullish day, price will open, creates a low. So the low of the day, it will then push up, creates a high, and then it will close somewhere near that high. This is a bullish candle profile. This is one candle, and all that's happening here, all in this one candle, is accumulation, manipulation, distribution. So price will open here. It might push up, starts to range, accumulate. We then trade down, which is the manipulation. So this is getting people caught on the wrong side of the market, manipulation, and then price reverses and we get distribution. Price will print the high for the day, and then it will close out somewhere close to that high. That is how a bullish candle is formed. And if you go onto your daily charts now, you'll see exactly what I'm showing you here. On the other side, so a bearish candle, we get an open. So opens here, Price will trade up. This is the manipulation. It will create a high. It will then reverse distribution. It forms a low, and then we close out somewhere near that low. That's a bearish candle. So range, accumulation, manipulation, distribution, because you've got to think what that would look like. If this is a daily time frame, if we was to go to a 15-minute time frame, we would have a range. We might push down, push back up, manipulation, price break structure. So on the 15-minute time frame, we trade back into a key level. We then distribute. We might get a pullback during the New York session, and then we distribute. Price finds the low for the day and then closes. And it's all power free. So it's literally, in order for a large move to happen in the market, price will need to have accumulation and manipulation before the distribution can happen. Candle range theory is a candle-based pattern that typically involves 3 candles. To dumb it down, it's simply accumulation, manipulation, distribution, as I mentioned. It's not a new concept, it's just a new name. It's how the markets have always moved, but it's about identifying specific candles. So candle 1 sets the range. So candle 1, this is the CRT, this sets the range, so we want to mark out the range low and the range high. That is our price range. And this candle will also normally trade into a higher time frame key level. So it's mitigating an area of internal liquidity. Price will then start to range, accumulate. Candle 2 is where we get the manipulation. So price will take the low of the previous candle. We want to see it close back inside of the price range. And then once we have that, we can expect or anticipate the next candle or series of next candles to distribute with momentum into the opposing side of that range. So we take the range low of this candle and then price trades into the range high. So accumulation, mitigation of a higher time frame key level, manipulation. And if you look at this candle here, price opens, creates the low. As I mentioned before, a bullish day, the low forms first. That's the manipulation. Distribution into that higher time frame liquidity, creates the high and then closes. So that is a typical bullish day. Now there's different variations of CRT. The first one I just showed you is a 3 candle pattern, but that is not always what we will see. That is the most common that I trade, but there's different variations. So I'll get into it now. So as I just mentioned, we can have a 3 candle pattern. So accumulation, manipulation, distribution, open, low, high and close. So if we are in a bullish trend and we get this, we can expect price to then distribute into that liquidity. And I will get into some chart examples a bit later on so you can see it, how it actually works. The next one is where we have 2 candles. So the same concept applies, but instead of getting 3 candles, we have the manipulation and the distribution happen in the same candle. So you can see we have 2 candles. This still acts as the CRT, price range from low to high. Higher time frame key level. This candle sweeps liquidity, but then it also distributes in the same candle into that opposing liquidity. This is most common when we have high impact news. So we might have a red folder calendar news event, and this is when this is likely or more likely to happen, because all that the news is doing is creating volatility. It's not dictating direction. So if price is bullish and it has intentions to be bullish and go higher, the news is not going to dictate that direction. It's just going to speed up the process That's why we see this happen in the same candle. Manipulation, distribution, range low, range high. So we sweep liquidity and then we take liquidity. The third variation that I trade is inside candles. So we have the CRT, higher time frame key level, but the following candles stay within the price range. So you can see the low isn't taken out. It's an inside bar. And then eventually we get the sweep below. As you can see, we close back inside. It's very key. And then we get the distribution. And the distribution doesn't need to happen in one candle. It could be a series of candles. So 2, 3, 4, all the way into that opposing liquidity. Just to reiterate, it's very, very important that we have the higher time frame key level. It can be this candle that takes or taps into the key level, or it can be the manipulation candle. Once we get that manipulation, the candle that we're expecting to distribute, so the following candle, shouldn't need to come back to this low because we've already manipulated. Price has now got fuel to move to that opposing side and take that liquidity because we've already had that manipulation. But it's very important we have the higher time frame key level, so that can be an order block, a fair value gap, or an old high or low. So now that we've spoken about the power of three, there's certain weeks that play different roles. So certain weeks, certain days, even the 4 hour as well. So what we will typically see is week 1 give us the range, week 2 give us the raid, so the manipulation, and week 3 give us the run, so the distribution. So that's the weekly. So during the week, Monday can give us the range, Tuesday manipulation, and then Wednesday distribution. And one key tip for you, Wednesday and Thursday are normally the distribution days, but if we don't see that distribution on Wednesday or Thursday, Friday can give us that. So Monday the range, Tuesday manipulation, Wednesday or Thursday distribution. If that doesn't happen, Friday can give us that distribution. And the opposite to that, if we do see that distribution on Wednesday or Thursday, then Friday can give us sort of a small range and price doesn't really move around too much. 4 hour, so the 4 hour time frame, 2 a.m. candle can give us the range, 6 a.m. can give us the manipulation, and then 10 a.m. can give us the distribution. Okay, so this is dollar CAD and we're going to start on the weekly time frame. So what I said, week 1 can give us the range or the mitigation accumulation. Week 2 manipulation, so it's the raid. Week 3 distribution, and potentially if price doesn't, on that third week, if price doesn't fully distribute into that liquidity, week 4 is when we will just get a continuation of that into that liquidity. We've got firstly internal liquidity, external liquidity. Week 1, and you can see from the bottom here, Monday the 5th of Jan. Week 1 trades into that liquidity, so it's a mitigation. Price would then start to range. Week 2, manipulation, so we take the high, close back inside. Week 3, distribution into the opposing side of that liquidity. You can see how the momentum really trades and pushes this right down into that liquidity. And these are moves that I have forecasted, weeks in advance. And then you can see week 4 is a continuation of that into that final area of liquidity. And you can see from the open, so this candle opens here. We open here, we trade up. So remember what I said, a bearish week, price will create the high for the week and then distribute. So that's exactly what we are seeing here. Next example is pound yen. So we've got internal liquidity. Price has put in a high, broken above previous highs. We trade back into that internal. We've got the external liquidity. Monday, So if you look at the bottom, Monday the 15th, what does price do? It trades into that liquidity. So mitigation, respects it, starts to range. Tuesday, manipulation, closes back inside. Wednesday, opens here, creates the low for the day, then the high, then closes. And we start to distribute. So Wednesday and Thursday distribute up, take liquidity, and then Friday just gives us huge momentum into higher prices. Next example, euro pound on the 4-hour time frame. So we've got internal liquidity, so higher time frame key level, 6 a.m. So as I mentioned before, 2, 6, 10. In this example, the 2 a.m. candle doesn't do anything, and then we get the 6 a.m. that trades into the liquidity. The next candle trades lower, closes back inside, and then we follow it with the New York session. We open, trade down, create the low, trade up, create the high, close, and then we trade into that opposing side of that liquidity. So we take the low and then we distribute up. And you'll notice as well, once we have this manipulation candle, we close back inside, you can see how the following candles don't trade lower. They've all traded higher. There's a reason for that. It's because price has already mitigated and gave that manipulation. So we trade higher all the way into that liquidity. Before we take out the higher time frame draw on liquidity, what we do is we start to range for the next trading session. We find again the internal liquidity, 2, 6, 10, accumulation, manipulation, close back inside. Again, price doesn't trade lower because it's already taken or it's already had that manipulation. So we then distribute into that liquidity. So another example of the lower time frames. This is the 15-minute time frame, but if you look over here, this is the 4-hour. So this is a trade that I took from today. We had the 4-hour, so 2, 6, 10. We trade lower, close back inside, distribution into that liquidity. So my entry was to the pip right here where that circle is. But all we've got is the 2 a.m. candle starting here, 6 a.m. So the 2 a.m. candle closes, 6 a.m. candle opens, 2 a.m. range, 6 a.m. raid, higher time frame key level, entry, 0 drawdown, and then 10 a.m. up until 2 p.m. we trade and distribute into that higher time frame draw on liquidity. So I got in here, stop loss at the low, 4.4%, and I can just show you a screenshot so you can see. So the next example is pound USD, another trade that I took. We have the 15-minute time frame. This is the daily time frame. So refer back to the start of this video, open, low, high, close on a bullish day. We get the CRT, candle 1, candle 2 trades lower, closes back inside. What are we expecting for the next day? For price to distribute, give us a bullish candle profile, trade higher into that higher time frame liquidity. So you can see trades lower, closes back inside. We open here, we print a low, print a high, close, draw on liquidity. 15-minute time frame might look like a lot, but we also have the daily true open. So the daily true open is 12 a.m. That's New York Standard Time, but for me it's 5 a.m. So we have the higher time frame key level. This is the range, price trade below. This is the manipulation key level. When we are bullish, we want to be buying below the opening price. So 12 a.m. New York time, 5 a.m. UK time, which is here. So the candle opens here. We trade up, little range, trade lower, manipulation. We've also got an intermediate low here. Asia session low as well. We then push up, fair value gap, entry, draw on liquidity is the daily candle. As we come into the New York session, we have a continuation. So that's the last area for price to mitigate, and then we continue. And then price would close out somewhere close to that high of the day. If you're interested in serious mentorship, daily check-ins, one-to-one coaching sessions, private group, and all of the areas I'm looking at, the forecasts, trades, they're all shared in the community, weekly market breakdowns, and you have access to myself 24/7. Get in contact and let's smash it.